It is Wednesday, December 12th. I'm briefly going to update the stock market and what's going on here. I'm going to breeze through a few sector ETFs here to get an idea of which sectors are the leaders and which are the laggards. And if the market is making a high here, then we want to be looking at what are going to be the sectors that are likely to lead the way down. This particular chart is XLB, so the materials, raw materials ETF, and we can see that it is relatively well off of its high from September, and it is forming somewhat of a channel here since beginning of September. And the way I look at these patterns is it's very significant when you see a phase of counter-trend market action that is completely retraced in less time than it took to form. And that typically indicates that a new pattern is starting at that point. And based off of what's happening here, it looks like a new pattern started at the beginning of September in many world markets and sector ETFs. And because the subsequent correction into November actually came down and broke that level, that indicates relative weakness in the market. Now, the psychology of the pattern is not yet complete as far as the upward psychology of the market, but it does set the stage for the pattern completing at a lower high. So we could be looking at an upwards A, a downwards B, and then an upwards C type of pattern. The ideal time frame on that, based on this, I would put as the end of next week, so coming right into around the Christmas holiday. There is this bullish seasonal tendency in and around Christmas week, so they would fit with a continuing uptrend here for a couple weeks. But that's what across the board most of these patterns are saying here. I think is that we could be looking at a significant high happening here in another week to 2 weeks time frame. So I'll breeze through a couple more. This is XLE, so the Energy ETF. We can also see that it broke down well below its September low and is a good bit off of its September highs yet. The financials are actually in better shape here. Click into a daily chart. They're approaching its old high, and notice that they did come down to near the beginning of September lows, but they didn't clearly break that support like the prior to energy and materials. Industrials are at new highs today since the October 2011 low. This is the technology ETF XLK. We can see that technology, which had been the leader during this bull run and the entire bull market since 2009, is a very large lagger at this point in time. And if you look at the chart of Apple, which I've covered relatively frequently over the last few months, you can kind of see why Apple has a heavy weighting in that, and Apple is lagging the market now after being a major market leader. So those are some signs that we may be seeing either some rotation into some different sectors, or possibly even a drawn-out topping process in the markets here. Consumer staples up near the highs. Utilities are quite a ways off the highs. So again, this one is currently lagging. Utilities, not. If the Dow does push to a new high, we'd want to look at this because the utilities are not up near a new high. This is the consumer discretionary, also near new highs. Healthcare near new highs. Retail is a little bit off the highs, but near new highs. Home builders slightly off the highs, and then also pharmaceuticals, if we go into a daily chart, quite a ways off the highs. And if you look back at the weekly chart, you can see there is this very strong bearish divergence between the weekly MACD on this last push up, kind of wedging type of top in pharmaceuticals, and then we've had a big strong move down that actually took out the June lows, which most other ETFs did not. So I would personally look at pharmaceuticals to be weak, look at energy to be weak on any ensuing decline, or energy here, and also materials. So those would be my picks for ones that if you're going to look for specific stocks or even sectors to short as we start to move into the New Year type of time frame. If we start to see the market meet resistance and then get appropriate technical sell signals, those would be my choices as far as the downside goes. Now I'm going to show some foreign market ETFs, so not US ETFs. and do the same type of thing here. This is Australia, and Australia is been off to the races here since the November pullback. It's well above the September highs, and it's actually finally pushed above its October 2011 rebound highs here. The chart pattern is somewhat interesting, and it looks like possibly a continuation head and shoulders type of pattern. The market has now broke above this left shoulder, and we're getting into a harmonic type of resistance zone here, which would be at this 78.6% retracement level. So I think this is entering a testing area here within the next couple percent up as far as on a pattern basis. Canada looks to be to some extent weak. We see the same type of pattern I pointed out on the raw materials XLB ETF, and Canada runs relatively closely with those commodity type of funds and materials funds anyway. So what we're looking at here is also a break of the early September, late August lows on the November decline. It is moving back up towards the highs, but I would look for that one possibly to be weak and in the ensuing decline. This is Germany. And Germany is also pushing to new highs here for the move since October 2011, so it's not really a laggard. Hong Kong, relatively strong. Italy had a very explosive move off of the July lows, so this one isn't real clear to me right now. Japan is forming a pretty classic rectangle type of pattern here, a box pattern. So if you just draw a rectangle around the market action since June or July here, pretty clear. So from a classical technical analysis standpoint, if there is a breakout above this line, especially with a gap up above these prior resistance highs here, or a large white candlestick, that would indicate a measured move likely coming. The height of the box there, height of the rectangle. So if we do see that move up, then we can have a pretty substantial move up in that particular index. If it breaks to the downside, same deal. The classical measuring tool would be to project that down to the downside. This is Spain. Spain is kind of like Italy. There's been these very large moves up. Possibly it's also forming a flat pattern off of this late August low, an ABC type of pattern forming here. We may expect it to come up and clip these prior highs before reversing. This is France, same type of pattern. It's off to new highs for the move since this past summer and spring. This is Singapore, same deal. It's off to new highs here. Still quite a bit below its 2011 highs. This is the United Kingdom, also off to new highs off of the October 2011 low. This is South Korea, also off to new highs here. And this is Brazil, and Brazil is very weak. So we can see that since 2011, Brazil has been very, very weak. It's also possibly forming the same flat pattern off the September low. That support was broken, led to a reversal, so we may be looking at that to move up towards this channel line that's parallel to what I call the 0 to B trend line. So we may be looking for this to peak at a lower high, and I would look for Brazil to be weak. So out of these ones that I've gone over here, I would look for Brazil to be relatively weak in the future, possibly Canada as well. So one thing to look for at this current time frame is when you're seeing a lot of these indexes push to new highs around the world, and you're starting to see some sector ETFs push to new highs, is you want to look for non-confirmations in the market. So you want to look for sectors or stocks that are not pushing to new highs, and then those are going to be implied to be weaker on any ensuing down move. So if you are out of the market or looking to short the market, you could look for some of those non-confirmations and only select those ones that have not moved to new highs if you're looking to short. That way you filter, you get rid of the strong stocks, and you really look at the weak ones and the laggards in order to short. A very simple way to do that is if you have some type of scanning tool with your broker or something else to just scan through stocks that are X% below their 52-week high, and that will give you stocks that have been weak and are not pushing to new highs at the current time frame. I'll briefly run through some charts of the U.S. markets here. This is SPY on an hourly time frame. We see the hourly MACD is having some divergence relative to these late November and early December highs. However, when a move is topping like this, I do like to see, I would view this move back down here to the zero line as corrective, and then I don't like divergences that come all the way down to the zero and come back up. So I would look for, before topping, possibly a new divergence to develop within this move off of the December 5th low. So if we start to see some choppy moves after the FOMC announcement today, and then we see a slight new high, and we do see a divergence in the MACD, I think that may be a reasonable short selling signal. Just on the time basis of this, I would probably look for this to move up, possibly even into the end of next week as opposed to the end of this week. The Russell 2000 has come back up and filled this large gap down from October. We see the daily MACD is very overbought, and it is very overbought, and it's below this October to June and August 2012 trend line there. So this is a somewhat similar setup to what happened in the July 2011 peak, is where you had a relatively strong move up in the markets. There was this initial trend line off of the May high that was broken, and then even if you look at the this pullback into early May, or excuse me, late May, as being the trend line that got broke down with a gap down there. As the market got extremely overbought, moving back up towards the trend line, it slightly failed to make a new high and rolled over there. And that was also after it slightly broke support from the March lows. So there are some analogies here, I think, to some similarities to how this topping pattern is playing out versus how I think this one may be playing out. But that's my particular take on this, is we may be just topping out at a slightly lower high on several of these indexes here. This is the Dow, showing that the MACD is coming back up to cross the zero line. Currently is very near the zero line, also below its trend line. So pretty much all the indexes are in the same boat there. We're overbought below this broken trend line. That could be a bearish omen, but at least the short-term trend right now is pretty clearly up. So it would probably be good to see on an hourly time frame. If I click back over to SPY, if we see the market initially sell off and then come back and get overbought at a lower high on the hourly time frame. So let's say we see this MACD get overbought, the market pull back significantly here, and then rally up and get overbought again at a lower high. I think that would be the safer time to short rather than trying to short this. Even though it's overbought in a daily time frame, on the hourly we're still pushing into higher highs, and we don't have real powerful divergence yet. And the weekly, let me click over to a weekly chart here. This is a 7-period and a 21-period stochastics on the weekly chart. Those are both still pointing up. I like to use this either a 5 or a 7 when you're looking at counter trend movements. So if this gets overbought here and this is a counter trend move, then we would look to then take daily time frame sell signals in anticipation of a downward move. This longer period stochastic I like to use sometimes just to get an idea of the larger trend here, and when you see it pull back below 50 like it has here on these corrections, that's a good indication of a corrective type of move. So right now we're still relatively stuck in the middle of this range from September to November, and I would be looking to be wary of trying to buy breakouts above this September high. I would let it break out and then see what happens. If you get a breakout, a pullback, and then a push to new highs after that first breakout, that may be a safer place to go long if the bull market is to continue. But just based off of the indicator setup here, I think that there may be some good short selling opportunities coming up over the next few weeks. Certainly the market looks set up for that. So that's my take on the market here as of the middle of this week, and I'll try and update this pattern as that develops over the next couple weeks and see if we can zero in on a topping time frame for a significant move down in stocks.